Hopefully everybody's doing well. Welcome to next episode of Analyzing NQ. So today, as normal, we will analyze the NQ, and today is Sunday, last day of November. So let's start analyzing NQ. Um, First of all, I want to start with monthly because this is our highest time frame. Guys, when we're top-down analyzing a pair, we have to start with on highest time frame, and highest time frame on NQ is monthly. More than monthly, I preferably don't look more than monthly. I actually don't look monthly at all, but right now, because we have this, let's clear this chart a little bit, because we have this monthly fair value gap at the moment, I look for that, and we tap this fair value gap. Let's change this to pink. I like this a lot than blue one, so I use purple for a long time, but it is not a thing. So this monthly fair value gap got hold last month, and look at this candle. We open here, actually open, high, low, open, high, low, close. So we opened here. Look at this candle. We tested this fair value gap. We got down to this fair value gap. We tested this and we pumped immediately and closed the bow. That means this monthly fair value gap got hold. And on on monthly, we can say monthly PD arrays, monthly bullish PD arrays are getting respecting. So that means I can be more bullish. When we look this on weekly, as you can see, market does not just makes a rebalance to this monthly fair value gap, and also we make a pullback to this last bullish range equilibrium. We have four reasons for market move: hunt liquidity, generate liquidity, rebalance inefficiency, and rebalance the equilibrium. And at the moment, as you can see, we have this bullish range, and we already tapped it to equilibrium price range and already tapped this optimal trade entry area, which is OTE. So, and also we have these monthly fair value gaps. I prefer to take these fair value gaps because this looks better than monthly. Look at this, just tiny gap between three up close candles, but this looks way more better. So I prefer to take this one. So as you can see, we already made the bearish movement. That we have to do. We have to hit equilibrium in order to continue our trend. But at the same time, we do not have to do that. Not 80% of the time, price tests equilibrium price range, equilibrium price levels of last ranges. It can be bullish or bearish. It doesn't matter. We test equilibrium price levels. So, and also we do not have to test equilibrium price levels. Just when we test equilibrium price levels, we can say we already made the minimum movement requirement, minimum pullback requirement in order to continue the trend. So I'm not specifically looking to equilibrium price levels and say, hey, we rebalanced back to equilibrium price levels, so that means we're pumping. No, this is not a case. When we test equilibrium price levels, just I'm saying, oh, you know what, we already made a movement, we already made a pullback, so we can say that if I'm bullish, I expect these fair value gaps to get hold, and market to hold more bullish because we're holding bullish PD areas, right? And I can expect market to not go much lower than this at that point. If we continue this fair value gaps, I can say, yo, we're holding bullish PD areas on higher time frame, so I can say bullish PD areas are holds. So, and also we test equilibrium, and you know what? When we test equilibrium, we have minimum price movement requirement for equilibrium price range. So I talk too much, but you got me. So as you can see, we already tested equilibrium, and then what? We swept the low, we swept the sell side, and after we swept sell side, market pump immediately. And before that candle, before the candle that pumped, as you can see, this candle get down and respected this area. I took this fair value gaps together because when we have two fair value gaps back to back, I prefer to took them together. So take them together. Sorry. So we test this fair value gap and swept this low and respected this area. So that means bullish PD areas are getting respected, right? And at the same time, as you can see, look at these down close candles. Look at this down close candle. Do we have any gap between them? No. So because we do not have any gap between them on weekly. Actually, I don't care if we have a gap between them or if we don't have a gap between them, because on monthly, as you can see, we already test this monthly fair value gap, and this weekly fair value gap means absolutely nothing when we look this chart on monthly time frame. So on monthly, this becomes my drawn liquidity actually. Also, because we have no fair value gaps between these down close candles, I can say this high will be clear drawn liquidity for overall price action. Right, this is just my weave. So let's continue. What have you said? This is my drawn liquidity because this is the first high after we made a bullish movement, after we hold bullish PD arrays. So we swap sell side, this is my sell side, join the sell side, and then what? Market pump higher. What did we do when we pumped higher? Look at this down close candle, we break this, so that becomes my change in the state on daily time frame. On daily time frame, we made a change in the state. This is my last down close candle. We also have a bullish candle right here, but this is fine for me to take this as a change in the state. So, and also when we look internal highs, as you can see, we have a high here, which is generated buy side. As long as we have a bullish order flow, as long as bullish order flows got respected, these highs will generate buy side and will be target. So on a 4-hour after daily, you know what, we have 4-hour time frame, and when I go down, as you can see guys, let's fix them. So when I go down to 4-hour chart, look at this. We have this bullish fair value gaps, got tested, hold. Look at this 3 candles, 1, 2, 3. We hold these candles, and then what? Market pumped higher. So that means this bullish PD areas got respected. This bullish fair value gaps got respected on the 4-hour. What have we said? On monthly and weekly, bullish PD areas are getting respected. So what I said, order flow was bullish on 4-hour, as you can see, all of the bullish PD arrays, all of the bullish fair value gaps getting respected into, and market pumps immediately when we test this fair value, after we test this fair value gaps. And not immediately, but you know what, we pumped higher, so we respect it basically. So I'm saying we respect bullish PD areas on 4-hour also. So so I can say bullish order flow is getting protected, right? Bullish order flow is in place, so I'm being more bullish actually. So also we have a generating buy side here, so because we have a gap between them, this is also a generating buy side, and this will my first target, first drawn liquidity before the high, because this buy side is before the high. So because we have a high before the high, this becomes my drawn liquidity, right? Let's go down on 1-hour chart. On 1-hour time frame, let's zoom a little bit. What do we see right here? What do we see? Stop and just try to read it. I wait you. So let's say you stopped and put your ID on it. As you can see guys, market after we test this 4-hour bullish fair value gap, and also we have a 1-hour fair value gap, but because we have 4-hour and 4-hour is much higher time frame than 1-hour, I'm taking 4-hour preferably, right? So trading weave is tweaking me. So we created a bullish volume imbalance, and then what? 1-2 candles, hold them and pump higher. Normally, I don't look for bullish volume imbalance, or basically volume imbalance, as a confluence, as a PD array, but right now, because we hold bullish volume imbalance, I can say bullish PD arrays are getting respected. I preferably generally look fair value gaps as an PD array. So, but you know, these held bullish, so this becomes an extra confirmation for me to say bullish order flow is getting respected. So look at this again, and we created a bullish fair value gap, right? We created a bullish fair value gap, so that means nothing actually, but we can tap this, but we do not have to tap this fair value gap. If we tap this fair value gap, this can be the best case scenario. If we test this fair value gap, we can break him, and we can hold him and pump. And it all depends on the overnight session. Actually, it all depends on the price action that we will have. But at the moment, we can say we don't have enough price action to say so. So it all depends on overnight session right now. We do not know. Price can test this fair value gap, but we don't have to test this fair value gap, right? We can just pump higher. But if we test this fair value gap, we can say, oh, bullish PDAs are getting respected, so I'm being bullish. Because I'm not specifically saying this fair value gap because this fair value gap hold. I'm bullish because we on higher time frame, on weekly, monthly, daily, 4 hour, we all respect bullish PD arrays. So I expect this fair value gap to get hold, right? You got my point? Let's go down on 30-minute chart. On 30-minute chart, actually we also have a 30-minute fair value gap, but because we have 1 hour and 1 hour is much higher than 30 minutes, I specifically look for 1 hour chart. But because we have also 1 hour, because we have also 30-minute fair value gap, we can say this area is stronger. And if we have a fair value gap also on 15-minute, I can say this fair value gap is much stronger because we have, model inside model. We have fair value gap inside fair value gap. So this becomes much more stronger area if we have, combined fair value gap back to back inside. I don't have to pronounce it, but you got my point, right? So what do we have right here? We have another bullish range. If you look this price action, this is my last range, and we have a fair value gap between this range, right? And we didn't tap equilibrium before, but at the same time, we know price tests equilibrium price range, equilibrium price levels. So I can expect market to whether rebalance this fair value gap or test this fair value gap and then continue to pump higher, or basically dump, or just dump. We do not know it, but we can expect it, right? So what happened? This candle closed and we created another 15-minute fair value gap. What did I say? Remember what did I say? If we have fair value gap inside fair value gap, this makes fair value gaps much more stronger. So we can say this area is stronger right now, but we don't know it. This is just an idea, So we can test this equilibrium price level. In the best case scenario, what do I expect is, I expect market to get down, test this fair value gap in the best case scenario, and then maybe like this. But we do not know it, right? We don't know. We'll see it. So on 5 minutes, actually we have nothing on 5 minutes. Also, we just have this fair value gap. What did I say? If we have fair value gap inside fair value gap on every time frame, this becomes a much stronger area, right? So we just swept this low. Let's mark this. We swept this low and market pump higher. So at the moment I can say this is not enough for me to say something significant, something you know, something clear. But I'm sorry. In my opinion, it all depends on organization. But at the moment, I can only say bullish PDA rates are continuing to getting respected, so I can be more bullish. That's what I wanted to say for today's price action. For next week's price action, that is actually all I wanted to say. Yeah. And again, thanks for watching. Hopefully you guys found this valuable. See you on the next one. Peace.